Gold just hit $5,018, and the market is in a state of absolute shock. While most retail investors are panic selling, the big banks are doing something completely different. Today, we re-diving deep into the latest CPI data leak and why your portfolio might be at risk. If you think gold is a safe haven right now, you might want to rethink your strategy. The primary reason for this bleed? The US dollar is regaining its throne. The latest inflation numbers came in hotter than expected, which means the Federal Reserve is likely to keep high interest rates. When the dollar gets stronger, gold usually takes a hit. But here's the part that Wall Street is not telling you. This is not just a normal dip, it's a structural shift in the 2026 economy. Let's look at the numbers. CPI is the heartbeat of the economy. With costs of living rising in the US, people have less disposable income to hedge into precious metals. This liquidity crunch is forcing even the big players to liquidate their gold positions to cover other losses. We are seeing a pattern here that looks exactly like the pre-crash levels of previous years. So is it time to sell everything? Not exactly. The top 1% of investors aren't afraid of red candles. They are looking for the golden zone. History shows us that gold thrives in long-term uncertainty. And the question is, can you survive the short-term volatility? I'm watching the $4,150 support level very closely. If we break that, we could see a free fall. My advice, don't trade with emotion. Watch the dollar index and keep an eye on the Fed's next move. If you want my daily breakdown of these charts, make sure to follow Finance Investor Lab. Stay smart, stay invested, and I'll see you in the next one.